Can your own lawyers and accountants ruin your startup? Find out next on This Has to Work. Kelly, we know that lawyers and accountants at some point become necessary for startups. Some may say a necessary evil, but necessary nonetheless. In fact, they become crucial sooner than later, especially lawyers for startups, even at early stage. Formation documents, like how you're actually registered with the government, your state government, county government, city government, federal government. Partnership agreements, like you're actually getting deals in the door, and so next thing you know, there's a contract in front of you, and you go, "Great, what am I supposed to do with this? I'm not a contract lawyer."
Yeah.
Fundraising, obviously, there's so much legalese, even in basic term sheets, let alone actual closing documents. We talked about contracts a little bit, and then also, HR policies, documentation. What happens if you have to fire somebody? Am I prepared for that? Did I hire them right? If I didn't, how do I unwind that? All of those things. So given that these are important kind of legal processes, how important is hiring the right attorney or law firm?
It's very important, especially on the front end. And the thing that I've found that, and I'm stealing your thunder here, but where founders get wrong is a few things. One, just because someone is an attorney doesn't mean they do that thing.
Yes.
Right? So the attorney that handled your divorce, right, isn't necessarily the attorney that you want to be doing the equity distribution or reviewing your business contracts, or you don't want that.
Yeah,
They're different lawyers.
Full disclosure for our audience, we actually had to navigate this, Kelly and I, on a deal that we were both working on, where somebody was using a divorce attorney to try and figure out basically a note purchase agreement for a convertible note, and it did not go well.
Yeah, and you put the attorney in a really tight spot because they don't know that world. And also, I think the other two things is not getting attorneys. One, you're getting attorneys who you've heard about the firm often, right? So they have more brand recognition, but you have never worked with them, and they're probably going to cost you a lot of money. And I think the third is working with attorneys who don't understand the startup ecosystem. And when I say ecosystem, I'm not talking about a location.
Yeah.
I'm talking about all the folks who are at the table of a deal at any point in time. So it's the founder, it's the co-founder, it's the investors. There are all these different people. And so they have to be able to kind of understand the perspective of all these different players.
It definitely gets tough when you're dealing with an attorney that isn't in this space because they don't understand kind of market terms.
Right.
So you will get an attorney that goes, "Well, what do you mean it's a 6% simple interest on this convertible note? I think it should be 3%. It's like, no one does 3%. Actually, people are moving the other direction and going higher than that. Or they don't understand why something is in there about information rights or major investor rights or whatever the case may be, just because they don't do it all the time.
Right.
I see that happen often where it's either the wrong type of law firm, but I also see it too where it's like too big a law firm.
For sure,
Or a law firm that's kind of cosplaying as a startup attorney or a startup law firm. Because even the biggest ones, the most famous ones, the Coolies of the world, et cetera, when they started out and they said, "We want to get into this startup business," they would defer fees. They would say, "We know you're broke.
Right.
We know you can't pay for these services that we're trying to render. But we'll make up for it on the back end when you become successful." And so they get a catch up period, or they get deferred billing or whatever the case would be, just to try to lessen the load on some of those. Just a quick time out to ask you if you'd please hit that subscribe button. 88% of people who watch our videos are not subscribed to our channel. So if you want the latest on startup news, technology, innovation, or even just business discussions, click that subscribe button. Promise to give you some good content. One long form video a week and several shorts along the way. Hit that subscribe button. Help us reach our goal of 5 new subscribers every single week. Thanks so much. So we talked about, we alluded to the divorce attorney, which wasn't great. And there's probably too many of these horror stories, but I'm going to make you pick at least one. Tell me about an example of a founder using the wrong attorney or the wrong firm for their startup.
I think the one that I've seen most often is attorneys pushing a startup to ask for NDA when you're talking to an investor.
It's a good example.
No investor is going to, if you don't have anything super proprietary, no investor is going to sign an NDA. And as a matter of fact, that is a very easy way to ruin that relationship with that investor, because you essentially just put them in a bad spot as well. And no one's going to sign it. Another horror story is a company needing to submit a, patent.
Okay.
Fairly quickly. And attorney missing the deadline. And they were like in the arms race with their competitor, and they missed the deadline to submit their patent. And it had lots of like implications for them. Attorneys who don't understand startups will really put a founder in a position where they don't look like they know what they're talking about. And it can have a reputational risk for the founder and the company.
Yeah, and I've been on the other side of the table when it's very clear that an attorney for a founder is marking up documents and making semantic changes, meaning they're just changing the word choice
and billing you.
It doesn't change the outcome. It doesn't change the implication. It doesn't change the requirements. But every time that they look at that document and every time it comes back with a different change, you better believe that that triggered some billing from that attorney. So go back to see above the mistakes of wrong attorney, too big a firm, firms that are kind of cosplaying as startup attorneys, however you want to put it. And you can choose the wrong attorneys very easily. And I think we agree it's crucial to get it right. So outside of those mistakes, let's take the positive turn, which is if you're a founder, what are the things you should be looking for in an attorney to represent you?
Yeah, I think a few things. One, ask other founders who they've worked with. If it's one thing that I love about entrepreneurship communities and founders, they will filter things and tell you the truth about vendors who they've worked with. So ask your colleagues who are other founders. When you go on the website, look at the team. If it is a bloated team, that's probably not the law firm for you. And one thing that's been very consistent that I've seen with startup friendly firms is the language is just so simple. You go on their website, you can easily understand what they're doing. You can easily understand what you're getting. Usually they already have free resources on their websites. Like seeing what type of resources and content that they're creating as a firm is a really good signal of, are they used to working with startups? But I would say those are the ones that the recommendations.
Yeah, I think the founder recommendation is a really good suggestion because founders already don't want to pay attorneys.
Right.
So if they've had a bad experience, they are all too happy to tell you about it in grave detail about why to avoid not only this firm, but this specific attorney doing this specific kind of work. So I think that that's probably really solid advice and an easy way to at least start that screening process. So if we haven't lost everybody in the audience talking about service providers, because I know this is a little bit like...
It's a riveting conversation.
Yeah, it's a little bit like
topic.
leg day at the gym.
Yeah.
You're not supposed to skip it.
Yeah.
You're supposed to do it. It's sometimes it's hard to get motivated.
You don't want to look top heavy.
No, and you don't want chicken legs. And so you have to think about these things as a founders because, and we're going to talk about accountants in a second. I will tell you from personal experience, I probably waited too long to get a very good attorney that fit my business and a very good set of accountants that fit my business. And I'll go into a little bit more about how much of an impact that made. But before people are running to the hills and going, well, this just sounds like you're justifying why, or just talking about how lawyers and accountants are bad or they can screw you up or all of that stuff, understand that the flip side is also true, which is they can be incredibly helpful.
For sure.
So moving on to accountants. Any horror stories you can think of? We'll just get started with that for founders, like having the wrong accountant or maybe not even having one at a point in time when they probably should have.
You know, I think the biggest mistake I've seen with this is founders getting an accountant when they really don't need one at that point in time. You probably need a spreadsheet at minimum, or a really inexpensive piece of software who can do the job for you, like a puzzle. But onboarding an accountant when it's just you, maybe to file your taxes, but there's so many other options that can do that for you.
Yeah.
But what about you? What have
I
been
would
the
say
stories?
think about an accountant at least for your taxes,
Mm-hmm.
right? State taxes, get it set up, whatever your estimates need to be, however you're filing.
On the front end,
all of those things, do that sooner than later. The horror story I would share was for myself. So I used an accountant that was referred to me, used them for a few years. It was fine. And then for whatever reason, and kind of without explanation, I was handed over to a junior kind of associate who screwed up my taxes. And actually caused me to have to pay a penalty to the IRS because I basically filed incorrectly. I didn't file the correct amount that I owed as far as that goes. And when I kind of called them out on it, they were like, tough, it happens, we won't do it again. Sorry, I guess.
Yeah.
But didn't feel very sincere, and they certainly didn't feel that compelled to kind of make it right. But here's the flip side that I had mentioned earlier. I forced me to fire them because I'm just not going to deal with that. I'm not going to have that I'm not going to pay for that is the simplest way to put it. So I found a new firm. I found a new accounting firm, and they immediately looked at my structure and they said, you should be an LLC with an S Corp designation. And I was like, okay, I have no idea what that means. I'm not an accountant. And they basically said in a nutshell, there's this huge tax advantage to doing it.
See,
right?
that's an accountant.
Yeah, so that's the accountant, right?
That's
and so
an accountant.
I went, and it probably reduced my tax liability by almost 40%. And I've been taking advantage of that ever since. So those are, really important decisions to make as far as who your accountant is, and understand when you should use certain folks and when you aren't. But when you get it right, it's incredibly helpful. So I think most founders get excited about hiring marketing people, salespeople, product people, engineers. Not many people get excited about hiring an accountant. But should they?
Should they get excited about hiring an accountant? If they can save you 40% on your tax liability, then yeah.
Pretty strong endorsement.
Pretty strong endorsement.
I got a feeling I'm going to get some DMs about like, who is it?
Who is that guy? If they can save that much for you. And I think accountants kind of flow into other vendors like marketers, salespeople, engineers, product managers. I think those are all the types of vendors that you need to have some sort of framework first before you hire someone to manage those things. But to your point, I think getting excited about having your taxes done and knowing what your tax liability is going to be on the front end, and then being able to plan your revenue around that, that's something to get excited about.
I think in both cases for lawyers and accountants, they can actually make you money, but it's a much more straight line between a great accountant saving you taxes, helping you maximize your kind of your returns if you have any, or minimizing what you owe to the government, how you're structured, all the things that, the example that I gave. And I think it's a good barometer for people to think about with an accountant. It's very easy, which is, am I saving more money than they're charging me in fees? It's one of the few service providers where you can do a very simple arithmetic to say, okay, they're charging me $1,200 a year to file my taxes, keep me on pace, make sure that I'm doing my quarterly estimates, whatever the case may be. And they're charging me $1,200 a year, but because of their acumen, because of their service, because of what they do, I could be saving tens of thousands of dollars in, taxes I don't have to pay. The thing that I learned from the first accountant who ended up screwing me over, that I have taken away from it, which I thought was really interesting. He said, tax avoidance is good business. Tax evasion is a crime. And you always want to be trying to practice good business practice and tax avoidance. Don't pay taxes that you don't have to. So a good accountant can help you do that.
I feel like such a capitalist right now.
How so?
I don't know, like tax avoidance, tax evasion. I feel it very like. But as a founder, what questions do you even know to ask to kind of determine if it's that type of accountant who can save you that much money?
I think I'd go back. I'd recycle your advice for lawyers.
Yeah.
What are other founders that you respect? Who are they using? How are they approaching it? I think the first step for any founder in assessing that is have them handle your taxes. I know that sounds like a big thing, but that's pretty straightforward, especially for a small business that has, kind of only a few inputs and mostly expenses and only, a little bit of profit coming in, or, it's in big chunks. Let them handle that first. And then if you want them to do other things like basic accounting or projections or payroll or other things, then you can expand it from there. So when do you think, this is the bigger question, when do you think founders should consider hiring an accountant?
I honestly think the moment they start generating revenue, obviously, okay, do your taxes, but the moment you start generating revenue, I think that would be an interesting progression for a founder. Let them do your taxes first, see how that relationship feels, see if they're transparent about what they can save you with was it avoidance? I don't want to go to prison.
Tax avoidance.
Avoidance.
Tax avoidance is legal.
Tax avoidance. See if how much tax avoidance you all can do together. But also sitting down with an accountant and having them talk you through your cash flow, and having them help you kind of create the framework for that. I think that's the next logical progression. I think that needs to happen early in the game.
Yeah, I would say don't make the mistake I made, which is I didn't pay enough attention to it soon enough.
Yeah.
I didn't have great legal representation. I didn't have a good accountant. I didn't appreciate what that could mean for me and my business. I'm a little salty about how many years of extra taxes I probably paid, or how I was structured incorrectly and could have avoided that. And I should have done it sooner. So for you, what would you say are the big takeaways for founders from this, from the attorneys, from the accountants, the service providers in general? What would you tell them to take away from all of this?
Yeah, I would say use your network. Ask around to see who are the trusted vendors. And also, just because you're not an attorney and just because you aren't an accountant, you need to have some basic level of understanding so that you know if you're getting pimped and taken. Can I say that?
Yeah, absolutely.
So you can know if you're being taken advantage of, because you don't want to be in a position where you're trusting someone so much and you set it and forget it, and then you look up and you have a situation.
Yeah, I would just add to that, remember these folks work for you.
They do.
It's especially salient with attorneys that want to try to dictate to you what they believe you should do or not do, whether that's strategically or whether that's in terms of a finance. And that also see earlier in the conversation where we talked about if the lawyer doesn't practice this kind of law and doesn't really know the market, they may be suggesting some stuff that kills a deal for you.
Right.
And at the end of the day, they work for you. So always make sure that you're in kind of the driver's seat. Take their advice, understand their expertise, but ultimately the decisions are up to you. And lastly, hire an accountant at least do your tax work. I know it sounds boring. It's not something that people think about, but it is very easy to understand that the money I'm paying them in fees versus the money they're helping me save or helping me maximize or optimize my own business can be a big one. So for everybody out there, thanks for sticking to the end. I know it's not the most riveting information that you probably were looking for today, but it is really important. So make sure that you're taking Kelly's advice and getting referrals from other founders that you trust and you think run great businesses, because they're going to tell you exactly where you should go for legal representation and for accounting services. So that's the episode. Thanks so much for tuning in. We'll see you next time. As always, like, comment, and subscribe.